And welcome back. So I bet you didn't know that prizes are actually taxable. What? So are awards. In fact, when my mother's friend, she won tickets on a radio show to the Olympics when the Olympics were being held in Salt Lake City. And she was super excited until she realized that the price of those tickets to the opening games or the opening ceremony were taxable. At that point, she was not really thrilled about it and wanted to know some more about the tax consequences. And here we are, you get to know more about some tax consequences of prizes and awards. So, no further ado, let's get started. So, as was just mentioned, prizes and awards are taxable. For example, radio call-in prizes, publisher clearinghouse, the most valuable player, the heavyweight belt. In fact, I believe it was Evander Holyfield who won the heavyweight championship multiple years in a row. The first time he won it, he really was super excited about it. The second time he won it, he was not super excited because that heavyweight belt is chock full of diamonds and rubies and emeralds and all these different things, and the value of that belt actually was taxable. So we'll talk about how he could have dealt with this situation so that maybe it wasn't as taxable to him in a little bit. Okay. Additionally, reality TV shows, when you receive money or when you receive gifts on those shows, those are actually income for services provided. And awards from an employer to an employee in recognition of performance. However, there are some exceptions. If all of the following are met, the prize or the award is not taxable. If the prize is received in recognition of religious, charitable, scientific, educational, or artistic purposes. The recipient transfers the prize or award to a qualified governmental unit or nonprofit organization. The recipient was selected without any action on his or her own to enter the contest or proceeding, and the recipient is not required to render substantial future services. I wonder, what could this be for? Could we say maybe the Nobel Prizes? Now let's talk about why this is important. Let's assume that we have a taxpayer who at his day job makes $50,000 per year and he wins a Nobel Prize. He makes $250,000 and he's like, oh my goodness, well, I want to contribute this to a charity, to the school that he works for or whatever the case may be. So he then gives the $250,000 away. Without this exception, he would be limited to a charitable deduction. That charitable deduction is limited to 50% of your adjusted gross income. So he would only be able to take a deduction for, if you take the $250,000 that he received plus his $50,000 of income, he has $300,000 of income for that year. He gets a deduction of $150,000, leaving him still with $150,000 of income that he must be taxed on. Well, he only made $50,000, and so because of the exception, he won't have to pay as much in income tax because he'll only be taxed on his $50,000 of income, not the $150,000 which included the prize. And as a result, it's a much better situation for taxpayers. Now, the tax benefit of the exclusion occurs in a couple of instances. The taxpayer does not itemize deductions and therefore would receive no tax benefit from the charitable contribution. So in the example that I just gave, he wouldn't have been able to receive a charitable contribution if he couldn't itemize, if he filed separately or he didn't have as much in itemized deductions. A second benefit is when the taxpayer's charitable contributions exceed the annual statutory ceiling on the deduction. So if he contributes more than 50% of his AGI, that would be a major limiting factor. And then the third is including the prize or the award in gross income would reduce the amount of deductions that the taxpayer otherwise would qualify for because of the gross income limitations. So for example, the gross income test for a dependency exemption or the adjusted gross income limitation in calculating medical expense deductions. There is another exception. The taxpayer can avoid including prizes and awards in gross income by refusing to accept the prize or award. So in the example of Evander Holyfield and the heavyweight championship belt, he could have said, no, please don't give it to me. And in a way, he kind of did on screen. But when you are receiving things on, say, The Price is Right or whatever, you can actually say, no, please don't give me the actual car or the refrigerator or the whatever. Please instead just give me the cash, and then you have the cash to be able to pay the taxes on, or you don't accept the prize or the award at all. Very different from compensation, where if you had the ability to take the compensation, but you didn't, it's still treated as if you constructively received that income. Okay, another exception is the gold watch exception. This is for certain employee achievement awards in the form of tangible personal property, like a gold watch upon retirement. The ceiling on the excludable amount is $400 per taxable year. If the award is a qualified plan award, the ceiling on the exclusion is $1,600 per taxable year. So that gold watch had better not be a Rolex, is all I'm saying. Now this exception only applies if the award is given in recognition of the length of service or recognition of a safety achievement. Now let's go over my very favorite example of how this applies, and this is dealing with The Bachelor. So back in the day when The Bachelor first began, the rules were a little bit different. The rule was that the bachelor needed to find love, and if he asked her to marry him, then great. But if she declined to marry him, she then could take $1 million instead of the bachelor. So in the first year, Michael Mitchell, we'll go with Mitchell, found Trista Wren to be the most attractive of all of the bachelorettes that he had on the show, and he gave her that final rose and he said, "Trista, will you marry me?" And she said, "No, I'll take the $1 million instead." Oh, it was fantastic. Absolutely fantastic. Okay, so in the second season, they turned to Trista and they said, "We had such a splash, it went over so well, we want you to come back so that we have even greater reviews. We'll give you $1 million to do this." She's like, "Sure, let's do this." So Trista goes through a whole bunch of bachelors to find the love of her life, and it is Ryan Sutter, a fireman from, I can't remember. And so the fireman, she turns to Ryan and says, "Will you marry me?" And he says, "Yes, I will marry you." And so in just awe at the fact that he would not accept the $1 million, because at the time they were still doing this, she says, "I will give you the $1 million that I was given to be able to do this show." So let's talk about the tax consequences thus far. So first off, she wins $1 million from this game show. Is it taxable? Absolutely. It's compensation for services and it's prize. So we're going to say that her tax bracket is 50% for Fed and state, so she owes $500,000 in tax. Now, the second time, she's given $1 million to be able to do this next game show. It is again compensation for services, $500,000. Now, the question becomes, did Ryan constructively receive $1 million but turn down that $1 million in favor of Trista? We don't know. We're not going to ask about it right at this point, so we're just going to kind of say whatever. Well, or we could even say that he took a bet and he didn't get the earnings from it. So we're going to cancel that out. But he did receive a gift. So at this point, Trista has now given him the $1 million that she received for doing the show on the second season for The Bachelorette, and so she doesn't have that cash anymore. But it gets even better, because in an installment several years later, ABC decides to film the wedding of Trista and Ryan. And so on the screen, and I kid you not, because I watched this and it was amazing. It was an auditor's dream. Every time she would go shopping for the different things for her wedding, the bridesmaids' gifts, the dress, the flowers, etc., on the screen, right at the bottom, like right here where on my screen, it would have a cha-ching, and then it would say how much that particular item for the wedding was. In total, as described by ABC in the episode of their wedding, she actually receives $3,500,000 in different aspects of her wedding. Well, the thing though is, was this a gift by ABC? And absolutely not. This is remuneration for services, or compensation for services rendered. She didn't have to publicize her wedding. She didn't have to have those TV cameras, but because she did and she provided this service to ABC, she now is treated as receiving $350,000. Now, I put stars here because it's not cash. It's items. It's property. It's whatever. But it is treated as income. And so she now has tax on that year of $1,750,000 worth of tax for that particular wedding. Now let's look at the tax consequences here. At this point, because she gave Ryan $1 million, she only has $1 million worth of cash that she can use now to pay her taxes. And she has $2,750,000 worth of tax that she has to pay to the federal and state governments. Oh my goodness! There is a reason why periodically you will see the first Bachelorette pop up in magazines and stuff, because she still has to try and figure out how to pay that tax on the income, the prizes, and the awards or remuneration that she received for putting on her wedding. Well, I hope you had as much fun as I did in this discussion. If you did, please give it a thumbs up. If you have any questions, feel free to leave a comment in the comment box below, or you can email me at centerfortaxstudies@gmail.com. Thanks so much for watching, and we'll see you next time.